This is Us podcast. I have Jamie to the left because we needed a filler. He has no idea about mortgages.
Absolutely.
I'm a little bit nervous about this.
No, it'll be fun.
We'll get it from a perspective of a client.
That knows nothing about mortgages.
Absolutely nothing.
I think all the good questions are going to come from this.
Yeah, we
Sorry,
have an
Glen.
expert guest speaker, Glen.
Hello.
Yeah, he knows everything about mortgages. Anything you need to know, Glen knows.
So
Glen
there you
knows.
go. So I'll be asking you a lot of questions.
Yeah, exactly.
All the info right up here.
So a couple of things I guess we want to touch upon. Glen made his checklist. So did Jamie. Jamie, I don't even know what your checklist is.
No, my checklist says...
It's making me nervous.
Says take 2 in the morning and 3 in the afternoon with plenty of water and we'll be fine.
Yeah.
And I just signed off on it. He's going to take it to the pharmacy.
So
There's a pharmacy next door, actually.
Yeah, go ahead. I can't even read both your handwriting. So I'm just going to go on the fly on this one. A couple of things. I know, Glen, we were talking about what do banks, lenders, monoline lenders, credit unions, what do they look for, checklist-wise for a buyer? What does that look like, right?
First thing they look at is the property. Property is the most important thing. So right there, if the property is across from a railway or it's in an industrial area like in Hamilton, the kind of where the factories are, Burlington Street.
Yeah, right over Burlington Street, we're done.
Yeah, that's a no lending zone. And, you find a lot of realtors, they kind of just really want to sell the property, so they'll take them there. But once that property's a no, it's a kill. It's a kill. It kills the deal right there. Lenders 100%. Won't touch it. Second, GDS, TDS, your gross debt service ratios and your total debt service ratio. So it's your monthly housing costs, basically your principal, your mortgage payment, your heat, and your property tax is your GDS, and that's all divided by your income, your household income. Then you have your TDS. It's all the same factors: property tax, and heat.
I'm feeling like most of you guys that are listening that aren't into mortgages, okay. Explain that last one, please.
Yeah, I will. So they look at your debts. Your
elaborate.
debts have to be between a certain percentage, from 36 to 39%. So they look at your property, right? So what you're paying on your mortgage payment,
Principal.
your principal, your principal amount, your property tax, right, and your heat.
Exactly.
So heat normally we use about $100 a month. So all those monthly costs divided by your income gives you a debt service ratio. So it has to be from 36 to 39%. It's a little higher.
It's like a stress test, right? So the stress test now we have to use the payment 2% above for the interest rate. For your principal payment, we have to use 2% above now. So makes it a little bit harder.
But essentially, what this is all for is to make sure that an individual can afford paying the mortgage.
The banks want to make sure you're not racking up your debts prior to, right?
Man.
Okay, I'll be the next mortgage agent. Don't worry.
So if you're driving a Lambo and you want to buy a house, that Lambo
it's probably not going to work.
It might affect the transaction just a little wee bit. Or buying a car right before you purchase a house, probably not a good idea either.
Yeah, we get that a lot. I just bought a new car. You didn't close your house yet. So you got to still include those payments. And people assume, even appliances, right? When you're buying appliances.
This is interesting to me because I think this kind of applies to basic math at the same time. It's like how much you make, how much you spend, how much can you afford, right?
You're right.
That's essentially it. You guys just throw in a whole bunch of nice little letters and acronyms.
I know. PITH.
Yeah, but it is what it is.
You can tend to calculate it yourself, really. Yeah. I mean, it's easy math.
Yeah.
It is, but a lot of people, they're like, I want to buy a house that's $1 million and I make $50,000. That's not going to work, right?
We know right away it's not going to work.
But do you find that percentage is big?
Not going to work. Sorry.
No.
But do you find that there's a big percentage of people like that, or?
Well, there's a lot of people with the misconception that they can afford bigger properties, right? Like
where do you think that misconception is coming from?
I think it's just go bigger, like buy bigger, right? So it's weird because they come in and automatically it's over the years I'm not saying that I am a guru, so numbers are numbers for me, so I can tell you right off the hop if you can afford it or not, and just looking at the numbers.
So do you think it's a lot of keeping up with the Joneses kind of idea?
100%. Yeah.
Somewhat.
Yeah. Well, it is, right? Because they're all wanting to get the best house out there, and then they're like, rates are so cheap, so let's touch upon rates. Rates have now become are below 3%. We're back in that, and now people are like, I can still afford it, but it's like you still have to add 2% to qualify. We still have to qualify you, right? And then the government comes out and the government's like, let's increase RSP withdrawal. Let's give you money to buy. But the government's not given a lot of money to buy, right? So, and that takes into effect in October. So this whole misconception of, oh, the government's giving me free money if I put 5% down, that's only going to account for maybe $25 of your mortgage payment. And that's not going to up your purchase price.
Yeah.
So like I've gotten inundated with calls because people are like, what, I can afford everything now. And it's like, the government's only giving you 20,000. It's not really much, right? That doesn't change your
when
qualifying.
You're purchasing something big like a home. Exactly.
Yeah. So that's the thing. So that's where we're standing. It's trying to honestly, work through these misconceptions, right? Because you're getting so many questions about, oh, I can afford a bigger house now. I can qualify more. No, you know what? Maybe the government should have taken down that qualifying rate. Instead of 2%, let's do 1%.
Do you guys think that and I'm saying this because I was at the lunch and learn last week with you guys, and I was actually listening, and and it was told that the media has a lot to blame when it comes to the misconceptions that the public has out there. Do you guys agree with that as well?
100%.
Always.
There's a lot of, so here's the one thing. I'm not knocking any other mortgage broker out there. There's a mortgage broker out there advertising on Facebook, and you know what? Props, because these, like, the advertisement's very basic. It's like they're writing a post about a situation. So like a case study. We were talking about this and we were going to talk to you about doing case studies. Anyways, the one was about child tax credit. We can now qualify you on child tax credit. Not every bank qualifies on child tax credit. And so I'm like, what a misconception, right? And I'm like, really? There's like how many, like maybe 4 lenders?
There's a few, and it's not just child tax. So if
not.
your only income source is child tax, there's got to be other sources.
It's got to be other sources of income. So that's like a top up, right?
It's a top up.
So this broker, and I'm telling you, 350 comments, 50 shares. Well, because I was like, this is ridiculous.
Because I think
this is amazing.
People will read that and go, oh, I want money. It's free
money,
right?
But that shows you the misconception. And like even what we hear on the radio. Oh, the Bank of Canada is holding rates. They haven't raised up the rates. Oh my gosh. And it's like, but if you look at the bond market, it hasn't moved. So why would they? It's all economics and people don't get it. So people go with the flow. They're like,
they go with the buzzwords, right?
Yeah,
out there. And then whatever it's convenient to them to listen to. Oh, free money. Woo. Let's go.
They only hear what they want.
They only hear exactly.
It's selective hearing, like with your kids. You only hear what you want.
Yeah, my wife says that I have a lot of that. Yeah, no. Continuing. Sorry, I was diverging. I apologize.
No, but I honestly believe that you should get right information. So, we inundate our pages, like our Instagram page, our Facebook page. Yeah, it's a little bit boring. We do 50 seconds clips. But those 50 seconds are valuable information. Yeah. Like I honestly believe we're trying to output, the right information. Does the media do a good job about, it's a bad time to buy? It's never a bad time to buy. It really isn't, because if you buy today, just like Greg Casey said from Genworth, Canada, when you buy today, next year it's going to be worth more. And the following year it's going to be worth more. So is it a good investment to buy? Yeah, it is.
Yeah. And again, some people might say, oh, but what if, the doubters, there's always like, oh, what if something happens? But those are unpredictable things.
Statistics show that your
statistically, and this is what he was saying, statistically, it shows like if you buy today, it'll be
your property will be worth a lot.
It is, yeah.
I mean, if a third
unless you
world war,
you overpay for a property.
Which
rarely happens now, right? Because you have to get an appraisal on a property, right?
Right.
So it's like, it's just, I don't know. For me, you are right. It is the media. The media plays on people's fear, right? And it's like, I believe wholeheartedly, like I do research, just research, I would honestly, if I was in the market to buy, I would start following my page. Not that I'm being biased.
But and it's funny we're saying this, and to your point, Glenn, people are selective of what they hear because nowadays they have so many sources of information that they could look into, right? I mean, you open the internet and just type in mortgages, and a lot of the stuff, it might not be the right information. information are all good information, but there is still a lot of information out there. And if you do
100%.
spend some time online, you will find
You
your
will find it.
answers.
This is very
Yeah.
easy. Google, I seen Gary Vee the other day. Google is your new mother. So
Yeah.
Google it, right? That's where all the
Exactly.
information
It
comes
is.
from. And that's going back to some of these other things. They don't just look at income. Back in the day, they just looked at your income, right?
Mm-hmm.
Correct me if I'm wrong. It was just
Even then, like back in the day, my dad was saying, back in the day, he said, he's like, when he applied for the cottage, he was like, I never had to provide all these documents. All I did was go in the bank, say, give me money, and they gave me money. And it was
was
like,
so
Dad,
easy.
like
It's
God
like,
rest
I'm a
his soul,
hardworking
but-
man. Give me
yeah,
money.
just
And here
give
you
me
go.
money,
Yeah.
and that's it, and you got it. But this day and age, like, it's not like that anymore. We are inundated with documents. We have to provide, and people are like, they yell at us, clients yell at us, and I'm like, if I could, I wouldn't get any of these documents, but we have to.
Yeah, because I think, and this comes to my perspective as well, we nowadays have so many more things that we're paying that back in the day our parents didn't have. Simple things, right? Like phones and
You're
all
right.
of these other things,
You're right.
internet and all that it adds up at the end of the month.
And
does.
that's my next topic. So the TDS includes all your debts, your credit cards, your lines of credits, your telephones,
you
your
don't
car
even
payments.
notice them because they're like in these small little increments, right?
Mm-hmm.
And when you start adding all of those suckers up, woo,
No, but even so, let's bring in lines of credits. Okay, so 2 years ago, the government mandated that lines of credits you would do a 3% repayment. So if you had a balance outstanding of 100,000, you were using a payment of 3,000 a month. Let's say your minimum payment was 150. That doesn't matter. The lender now will use
The 3%.
$3,000.
And some even use the balance.
They
the
some
balance.
use the
They don't-
balance. Yeah. So
Or they use the total amount, not just what you have left on it,
yeah,
correct?
Yeah.
Yeah,
Exactly.
some lenders-
some lenders do that.
But I know there is because I experienced this
but there
last
is-
week.
Yeah, that's right. So that's why I'm saying to you. So like people assume they're like, well, I have a line of credit. It's a cheap payment. I'm like, did you know that the government now mandates us to do 3%? So, now we're qualifying at $3,000. So, is it the best idea to get a line of credit on your home to buy an investment property? Not so much. Maybe sit with a broker, sit with a mortgage agent, figure out what the best option is for you to get that second property.
And this is why, people should definitely call guys like you, because you will go through every single
100%.
situation. Every single person, I think, has their own sets of differences. It's so custom.
Yeah.
Like there's so many
You're right.
pieces to that puzzle.
It is.
Like it's
You're
almost
right.
impossible for you to try to Google the situation and get the answer, because
You're right.
you will get the overall answer in terms of, rates and how things are going. But I
Exactly.
think when it comes to your personal numbers,
Yeah,
they're
your
so
portfolio.
different.
It's just looking at your portfolio. I keep telling people, everybody assumes they know what they're pre-approved for, and it's like your situation is different, right? And from anybody, right? So, and that was touching upon our video, rate versus service. Is it all about the rate, right? Like you're gonna get the best rate.
But that is the first question you guys get, I bet.
all the time.
What's your rate, right?
Yeah.
But
Like,
information
okay.
is key. We provide
Information is-
information.
yeah.
We provide scenarios, like touching
You
on
guys
the
go
line
the
of
extra
credit.
step.
Keep in mind, if you get this line of credit, it may affect your debt service ratio. Your debt services may take you a little higher. You're not going to get that premium rate. You're going to get put into another category, like a B side, which
Yeah.
your rates tend to be a little higher.
Yeah.
Your terms are only a year, 2 years, 3 years, right?
Can I ask you about that?
Sure.
B lenders versus A lenders versus. Can you
Yeah.
summarize that a little bit for me? So
Sure.
So your B lenders will go and they'll take a little bit of a risk. So they won't. So let's use business for self, for instance, or bruised credit. They will take the risk of financing that file, but they will charge a premium, and on top of that, they will charge you a 1% lender fee.
So, what would make someone go with a B lender? Is it
Bruised
because
credit.
the
Bruised
okay.
credit.
Bruised credit,
Your
yes.
debt service ratios are too high
high.
for the 8 side. Your credit score, which she touched on, which I was going to touch on as well. So, normally below 600.
Yeah. Or even business for self clients that don't claim enough
Right.
on line 150.
Yeah.
You can get 6 months bank statements showing the deposits, and they will take an average, right,
okay.
of income. So
Okay.
these are things that clients, and then they assume some brokers and agents. Not that I'm talking bad about them. They will throw you right into private because B lenders tend to be a little bit more complicated and a little bit more.
They take
work.
a little bit more time. It'll take
Yeah.
a month, 2 months
Yeah,
working
you're
on
not
this
getting it in
file.
2 weeks.
Okay.
Yeah, so a quick close is not going to happen most of the time.
No.
Well, that's
No.
another good thing for people to know, because I guess from my perspective, you would think, oh, in a week or 2 weeks we'll get this resolved. But I guess
No.
if you have to go that route, you do need to keep that in mind, right?
Yeah,
That's right.
no, for sure.
So if somebody is in the market to buy a house and they think they might have to go into a B lender,
You can
they
sit
should
down,
actually they should sit down with you guys
Yeah.
before
100%, yeah.
anything anyways. But you know how it is. Some people start looking at what they want to get
They'll
first.
make an
and then-
offer, no pre-approval,
Yeah, and
no
then-
consultation. They'll make an offer.
And then that's when
You get that a lot, though.
it
You
comes
do get
Monday
that a
morning.
lot.
You're like, hey, I made an offer on this house.
And you're like,
it's closing in 2 weeks. Okay, let's do
that
it.
might not happen.
So, and then you do what you can, right? And you
Yeah.
got to explain to them right there and then. A side, B side, whatever it takes.
Yeah.
Even if we have to do this for a year for you, next year you'll be in a different situation. But this is what you got to do.
But we
Yeah,
have
and
the
those-
avenues. Like me and Dee, we went through a case last week, right? The client didn't know that his wife overspent. We had a B deal done, and then Dee's like, "Oh my God, 2 weeks to close in," and his wife spent this X amount of dollars, like $40K, and he had no clue on the line of credit. So we had to rush and find something for private. So that's why I'm saying to you, like, we have the avenues. It's not like we don't have. So let's say you're getting an A deal, and let's say something goes wrong before closing. We can close that file, no problem. 2 weeks, but it's going to cost money, right? But
Yeah.
we're going to get it done so you don't get sued,
And
right?
it will take that extra little bit of time, but that, I
Yeah.
mean, that is what it
Yeah,
is.
yeah.
Yeah, exactly. So that's why I'm saying, like, for me, I'm going to be honest. If I was in the market, and I'm not being biased, if I was in the market and I was going to buy a house, regardless, I can go to an A lender, which would be your banks, your credit unions, monoline lenders. I can get you the best rate out there. Why wouldn't I want to go to a broker who has all avenues possible instead of just limiting myself to just go to the banks? Not like I'm not trying to trash or trash talk banks, but why would I just want to go to one option stop?
Yeah.
I feel, and I was talking to a bank manager last week, and she said something to me. She said, there's going to be a time where banks are not going to process deals anymore. They're just not going to do mortgages anymore. They're going to leave it for the broker to do. And the broker will book it through the banks, right? So you essentially go through the banks.
Essentially, you'll have to go through there. But
Yeah.
what baffles me is, like, I think people will go the extra mile to buy cheaper groceries, but they won't go the extra mile to speak
100%.
to a broker and
There,
to get
there's
the
that
information,
big precedence about banks. People don't know. People don't think outside the box.
Yeah,
People
I
think
agree.
banks have it all.
Yeah. No, it's true. That's
Even
why
though there's no relationship, there's no above
there
and
isn't.
beyond.
They'll
There's
just
no
walk
relationship
into a
with the bank.
Yeah, it's weird. They'll just walk into a bank and be like, I'm buying a house. And I'm going to be honest with you. When you're a mortgage broker, you have to take a course. You have to get certified. You have to pass an exam.
We have to be licensed.
You have to be licensed.
What, you mean you guys actually have to know your stuff?
No, you do. You have to get licensed. So you actually get a license. So
Absolutely.
you're certified,
Yeah.
right? You're certified to deal with mortgages. When you go into a bank, these people are salary employed. I worked in the bank. I was a mortgage specialist, so I know firsthand you don't need a certificate. I learned everything because it was self-taught.
Yeah.
And I became the guru because I learned through mistakes. I made a ton of mistakes at the banks, right? So that's why I'm saying, like, if it was up to me with the knowledge that I know, I would go to a mortgage broker, mortgage agent. Like I would 100% go and see them because I know that they're certified and they took an exam to get that certification, right?
To me, one of the things that kind of
certification. Is that a word?
Certification. That's
Nobody
right.
put
You're right. You're right.
Certification.
Certification. Shione. We can add a Shione at the
I
end.
don't speak English.
But one of the things I'm here thinking is, why isn't it law? Like, why isn't there a law in place that says
Yeah, I
you're
don't
looking
think so.
for?
That's not gonna happen.
But it
That's
just
like
makes so
insurance.
much sense,
No,
right?
you're right.
I'm looking for a home. If I go speak to anybody, you should automatically here's my. This is how much I can spend.
Credential, yeah.
This is how much I can spend for a
Yeah,
house. And now your real estate agent will take that and go look for homes based on that. Like it makes so much sense in my head. I don't get
Yeah.
why it's still not a law or something that, it just.
Some people still do it. I had one over the weekend. I just put in a file last night. First-time home buyers, they wanted to purchase a home. 600,
approved?
650.
No?
They're pre-approved. So
nice.
his TDS came in a touch higher, but it's workable. Pay off a little bit on your
but
credit
that's-
card. It's
that's-
totally
like
workable.
you said, you can
right?
work
But
around
right there,
that,
I
right?
give him the advice.
Yeah.
I told you right away. I said, your price point is good, $550, but this is what you need to do.
Like
and
it-
don't buy
it even
furniture. Don't do
baffles-
this.
Yeah, you
use
gotta
your,
educate
baffles
your
my
clients.
mind when like even for real estate agents, honestly, if I was a real estate agent, I would not even go around looking for anything for a client if they weren't
A
pre-approved.
lot of
Like,
them
it
are
doesn't
starting
make
to
sense.
do
A
that.
lot
Like,
of them,
why would
now
they-
they're doing it because now it's harder. Right after the stress test, it became
Yeah.
a lot more difficult to get people approved. Like,
Yeah.
you know, people asked about our business. My business, I didn't feel it. But a lot of people did have an issue. Like it's harder
This
to
is
get
just a waste of
approved.
time, I think. From
It is, but
from-
agents still do. Like agents do it, but just like we talk about us, a lot of mortgage brokers. Let's flip it to the mortgage brokers and mortgage agents. They don't check their credit till they actually get approved, like an approval, not a pre-approval, because they don't want to pay the money. So we do the exact same thing a real estate agent does, right? So it's in every profession, you know, whether you know the real estate agent chooses not to get that pre-approval. On our side, it's the same thing, right? I can pre-approve you based on what you tell me, and I'm like, I'm not going to check his credit because I don't want to pay the,
you
the
have
$8
to. You
bucks,
have to.
$12
You have
But
to.
you have to, because I've educated my agents to do that. I'm like, put the money in, invest that $12. Whether they, you know, if they choose not to come with you, at least you didn't waste your time. So it's in every profession, right? So I can essentially issue you a pre-approval with no credit bureau check.
Yeah.
And what if your credit's botched? And I just gave you a pre-approval and said, hey, go to your agent and tell your agent you're pre-approved.
Yeah.
Based on not checking your credit, because I'm going to trust what you say as a buyer, right? And I'm not saying all buyers are liars, but a lot of buyers don't know,
Yeah,
right?
they just don't know. They don't
They
even
just
know
don't
their
know. A
credit
lot of-
rating.
There's this whole mentality of buyers are liars, but buyers are not really liars. Buyers just don't know.
They just don't know.
They just don't know.
They just
yeah.
don't know. So like to say that it's hard, right? Because I hear that a lot now, like buyers are liars, and it's like I just really
No.
believe that they don't know about credit bureaus. They don't know about income. They don't know about
Debts,
if I go out
debt
and buy
service ratios.
Yeah, I don't. If I go out buy furniture, what does that have to do with my? It has a lot to do with your pre-approval, right? Or your
Buying
approval.
a lot of furniture, yeah. for
Yeah.
sure.
So that's why, you know, I think it's in every profession. You know, I just feel that, you know, if we're doing our due diligence with our files and we're getting people pre-approved, just know that if anything comes from the Costa Group, I can guarantee my guys have done the right thing to give you a pre-approval.
Oh, yeah.
So,
One more thing, down payment. Down payment is huge. This is sometimes a deal breaker because people will not, they'll start, you know, depositing funds into their accounts maybe a week or two before, when you have to show that money in your account for 3 months, 90 days. So I
you
tell
need
them
to
up
show- to
front.
show the, like, the-
yeah,
on
the
the
deposit
statements and the
funds.
deposit-
Yeah,
okay,
the
yeah,
deposit
yeah.
funds. There's still some banks that do their 30-day, but we recommend
I'm
90
so
day.
shocked. Yeah, I do 90 days. Like I'm
90
shocked
day
that they do
history of
30
your
days,
bank
but
account.
It's usually 90 days.
You know, whether it's $5,000, so $5,000 being deposited, they want to know where it came
Yeah.
from. Can you show me
It's
where
like
this money
PI
came
work,
from?
Man. Yeah, it's
So
pretty
tend to be like
hardcore.
PI work sometimes, but that's another thing that people don't realize. Keep your money in your account. Don't
In
start
one
swinging
account.
left,
Don't
right, center.
start going transfer left, right,
And if
center.
you do-
it's complicated.
If you do, just
You
keep
gotta
track
show it,
record
yeah.
of it so we know
Keep
and
it
we have a
simple, right?
story.
And
Keep it
because
Keep
simple.
it very simple, yeah. And there's a lot of people that do this. Well, I'm going to buy RSPs. There's now this big financial planning thing that they do. Let's get a line of credit for whatever, I don't know, 40,000, and let's deposit into your RSP. You got 90 days to close. That's fine. You have to account for that line of credit.
Yep.
You have to do the 3%. So you just got knocked out of being approved, right? So you got to honestly consult with your mortgage agent and broker before you start going to a financial planner deciding to get a line of credit or a loan, for that matter, that has to be worked into your total debt servicing.
That makes
So you
total
got to be
sense, yeah.
careful.
So many little things.
So many little things. Yeah. So, so I would honestly just keep it simple. So
Keep it simple, yeah.
yeah.
All right.
All right. So one last thing we were touching upon is MLS, and this would be for our realtors out there, anybody selling a house, your MLS remarks. MLS remarks are so big. Like it can actually kill a deal or it can make a deal happen. Your as is. The property is as is. That will kill a deal because a bank automatically, or a lender or a monoline lender or a credit union, will turn around and say as is. What
So
does that
they'll
mean?
assume that it's basically falling apart.
That's correct.
Yeah,
So
there's
I'm
a
assuming
default.
right now.
Yeah, there's
Yeah,
obviously
so-
defects or
Yeah, and then automatically what happens is that property gets a red mark. So any other lender that touches it, oh my God, I'm knocking this thing over. Any other lender that's touching it will get declined. So my tip, this is going to be my tip of the week, would be our tip of the podcast, would be your remarks. Just be careful with it, or consult with your mortgage broker. If you have a mortgage broker you closely work with, ask their opinion on your remarks. I know it's so far-fetched and you're probably like, oh, I don't need to ask anybody and I'm just going to do my own remarks. But there was what was the remark with student rentals? oh, student rental, you're going to make a ton of money, blah, blah, blah. Don't put student rental. Nobody finances student rentals.
Because
you know?
it's going to be all torn apart. That's kind of the idea.
That's the idea
Yeah.
they look at it. They
Yeah.
look at it like, what's going to happen to this property? Is it going to be marketable down the road? Because
100%.
after these guys are done with it, so they kind of put that.
Well, student rentals are more liability. You're looking at liability. You're looking at, it's like a rooming house, right? And rooming houses are huge liabilities in the bank's eyes. They will sue the bank. They will sue the landlord. They will sue anybody that gets hurt in that home. Hazard for fire. You have to be careful. So banks. I remember maybe 5-6 years ago, Scotiabank was financing 100%. I was with Scotiabank, but I know they were financing these student housing. But then they got away from it, or maybe it was 7 years ago. But they got away from it. They started to shut down. RBC was doing it, shut down. You just have to be careful. Your remarks, just remember, your remarks are being read by the lender. So how you view it, if you're saying as is or great fixer upper, anything that's towards the house being not an okay livable situation, the bank will not finance it.
So you always write it thinking about the lender and not so much the buyer.
100%, because you're trying to get people, you're trying to sell, but you just have to be careful. That's all I'm saying. I'm not trying to deceive your lender and all that, because eventually they're going to have to do an appraisal. So they're going to find out if that property is worth it or not.
Mm-hmm.
So all I'm saying is just be cognitive of the remarks that you're putting down, right? What was the last one you did your financing? Which one was it?
That was a couple weeks back. It had quite a few things in there that I can't remember. I think it did say as is.
Yeah.
I think it was one of the key words.
But it
in
really
there.
wasn't an as-is property. Like
No.
they're just trying to cover the seller's butt, right? They're like, well, we don't want the seller to get sued in that. So all I'm saying is just be a little cognitive, just be careful when you're not be careful, just be cognitive of what you're writing down. That's pretty much it.
Makes
Yeah,
total
property,
sense.
number one thing they look at. First thing they look at.
100%.
They Google the property. They
Oh,
want to
yeah.
see what it looks
They're
like.
PI in that property. Left,
First
right,
thing they
center.
do.
Yeah.
So I've had deals where they call back. They don't even look at the file. Property, done.
Yeah.
Yep,
Yeah.
cut
So
it
that's
off.
why, So just be a little bit more aware of what you're writing down. That's pretty much it.
All right,
Yeah.
cool.
All right, this was an awesome podcast, Jamie.
you
You weren't too.
I wasn't
You were
too
good,
bad.
man.
I was
You were
good?
actually really good. You
Yeah.
knew your stuff.
It's the
like
podcast
recording us
background.
for
Yeah.
You got right in there. Perfect.
I know.
Right there.
Thanks, Jamie.
No,
yeah,
thank
thanks
you guys.
for listening. And any questions? Call us up. I'm gonna do my
Yeah, you're
Call us.
famous. Call us and comment below.
comment below. All right.
Love it.